Hey, everybody. Welcome back to the Blockware Intelligence Podcast. Hope you're all doing well. Before we get into the show, let me tell you a little bit about our sponsor, FTX US. FTX US, one of the largest crypto companies in the United States, is the safest, most regulated way to buy and sell Bitcoin, Ethereum, and other digital assets. You might have heard of FTX from their partnerships with Tom Brady, Steph Curry, or their recent Super Bowl commercial with Larry David. With FTX, you can trade crypto with up to 85% lower fees than top competitors. There are no fixed minimum fees, no ACH transaction fees, and no withdrawal fees. You can also use the FTX app to buy your favorite NFTs with no gas fees, supporting both Ethereum and Solana blockchains. Download the FTX app today in minutes and use referral code Blockware to earn free crypto on every trade over $10. Again, that's referral code Blockware to get started today. Usually we're hyper-focused on Bitcoin, but right now it's an exciting time in the world of Ethereum. Now, we know a lot of you are holders of ETH, and if you plan on hanging on to that precious ETH long-term, then it's a great time to think about staking that ETH with Blockware Solutions. Staking your ETH in a Blockware Solutions validator node is one of the safest ways to earn rewards while having full control of your assets and contributing to the decentralization of the Ethereum network to help keep it secure. With the upcoming launch of Ethereum 2.0, which moves the network to proof of stake, rewards are anticipated to increase from the current 5% APR to 10 to 15% APR. Right now, it looks like it could happen in June, so stake now before the logjam that is bound to occur as more and more validators come online before the merge. With Blockware Solutions staking as a service, you get an intuitive dashboard that shows you your rewards earned and other vital stats about the validator's performance. For more information, go to blockwaresolutions.com and click on Request a Quote, and we will get back to you with more information as soon as possible. Hey, everybody. Welcome back to another special episode of the Blockware Intelligence Podcast. Today, we have my good friend, Dylan LeClair, back on the show for a second appearance. We got a lot to talk about today. The Fed just announced their hiking rates about 8 minutes ago, so I'm sure we'll get into that. But first, I want to start with how you doing, Dylan?
Doing great, man. Feels good to be back. Feels good to catch up with you again. I haven't talked in a couple of days, which is longer than usual, but turbulent times in the legacy world. Bitcoin's just chopping around in a range. Little bit of a switch up than what we got in 2021 with Bitcoin crypto going nuts and legacy kind of calm waters. So it's exciting to be, kind of just have a change of pace in that sense.
Yeah, for sure. Before we get into all the kind of like meat and potatoes of all the finance stuff, I know you're in Austin right now. So how's that going? What are you up to there? And who else is there that from like the Bitcoin community?
Yeah, I just did a recording with Peter McCormick talking about some stuff in the legacy world and Bitcoin. Went to the Unchained Capital office, and there was kind of like a human rights reception with Alex Gladstein, who just launched a new book. So saw a lot of cool Bitcoiners there. Definitely a lively kind of Bitcoin crowd in Austin. So definitely pretty cool in that sense. Got pitched to move to Austin probably 50 times so far. So we'll see if that happens, but it's nice and the weather's sunny. So
it'll be a little warmer than where you are now.
Yeah, I mean, I took the day before I took off. I got 10 inches of snow, so it feels nice to be down south.
There you go. When was the first like meetup you went to? Because you've been a lot more active with like the in-person stuff. I haven't been to a single conference or meetup or whatever you want to call it. So like, what was the first one that you went to, and like, what was kind of your experience with like meeting Bitcoiners in person?
Yeah, dude. I in August of 2020, I went to BitBlock Boom, which was kind of it's like a niche Bitcoin meetup in Dallas. I didn't know really anybody except a couple anons on Twitter. Like I was myself an anon on Twitter, and so just went there with really no plan, but went by myself and met a bunch of cool people. And ultimately, that's kind of how I got my start in the industry, if you want to call it. Met some guys from BMag and kind of parlayed it into a job opportunity, which is pretty cool. So definitely encourage people, like especially if you spend all your time like I do and like we do, kind of on the crypto Twitter, Bitcoin Twitter, then it feels good to kind of meet some of these people in person, and it feels more real in that sense.
Yeah, for sure. What are you doing? You talk about Bitcoin Magazine, obviously. What are you doing there, and I know recently you started working at UTXO Management. So I guess walk us through like what do you do at Bitcoin Mag specifically, and then as well, what's this new role that you've taken on at UTXO Management? What's kind of your day to day look like there?
Yeah, so head off the market research for Bitcoin Magazine. Obviously, a Bitcoin focus, but we look at all sorts of things in legacy markets. Uh, Bitcoin, there's on-chain analysis, derivative market stuff, as well as kind of macro, as that increasingly plays a role in the price action of Bitcoin. So was doing that since about last summer, heading off the deep dive, which we are rebranding, name to be announced soon, but that's been my role for the longest time. And then recently, about a couple months ago, not exactly sure when, joined their hedge fund as a lead analyst to kind of navigate the turbulent times that we're in. Not pulling the trigger yet personally with the fund, but more so just kind of giving input as to what I'm seeing.
How many guys work at the fund, and like I guess what's kind of your specific? I know you touched on the name of your role, but like what are what are you doing in and out? Is it just you're filtering through research and then sending it over to some of the people who are executing trades, or like how what's kind of your day to day or just general role there?
Yeah, somewhat of a small team. I think like five or six, and really kind of day to day, just kind of sending along what I'm seeing. Somewhat informal. I mean, we meet on a daily basis, but just really in particular, my role has been focused on kind of the deteriorating credit conditions. So, I mean, kind of look at charts all day for better or worse, as well as kind of like podcasts and the like to kind of filter through what I try to find to be quality information. So my role is just kind of to give input and try to maybe be aware of some of the market trends before things are priced in. So started that a couple months ago. Was more so just kind of managing capital for myself, obviously since early 2019 when I was like legally allowed to do so. But it feels good to kind of be part of a bigger role.
Yeah, for sure. You're obviously going to be at Bitcoin 2022. What are you doing there? I think we're doing a panel together, like an on-chain panel. So I don't even know exactly who else is going to be on that panel. So I'm curious personally to know, as well as what other panels are you doing, or are you speaking and doing other kinds of things there individually?
Yeah, Bitcoin 2022 is going to be a great time. I think proprietary as to how many people exactly are showing up, but I believe definitely more than 20,000. Going to be wild. It's going to be beautiful. We are speaking on an on-chain panel, I believe, with Checkmate and one other. I should know this off the top of my head, so forgive me if I'm forgetting who you are if you are listening. But yeah, I think maybe doing one other panel. Don't love public speaking, but it is what it is. I think maybe having some other roles and kind of the setup of it all, but more so just going to be having fun and connecting with awesome people.
Yeah, it'll be fun. How was it last year? Because I wasn't at the one last year. I'm sure it was pretty nuts getting all those Bitcoin people in just one spot.
Yeah, there was around 10,000 last year. Only complaint from people, or the biggest was the line at the first day. We just logistically there was some confusion, and so people are waiting in the sun in Miami for the back end of people for probably an hour or two, maybe three, unfortunately. But we'll have that all figured out. I think it's going to be a pretty smooth ride. And there is a music festival at the last day, so it's going to be more of a party towards the tail end. So I think it'll be a fun time.
Dope. Yeah, I think I'm leaving the evening of the 9th, but we'll definitely link up and do some stuff sometime during that day. We'll figure it out for sure.
No doubt.
Let's go ahead and like kind of dive into, I guess, the quote unquote meat and potatoes. Obviously today we just, as we just mentioned 15 minutes ago, Fed just announced they raised rates 25 basis points. What does this mean for the market? Is Bitcoin going to zero? Is it all over? What does this mean for the Bitcoin market, as well as legacy markets? Because, I think you've been one of the, bigger voices on Twitter, kind of highlighting what's going on with the credit markets and just kind of, shaky macro backdrop that we have going on. So I guess, kind of highlight what's that thesis been for you, and how does, this announcement now kind of play into that thesis?
Yeah, so I think one of the things to highlight is that the kind of market conditions in general, broadly, really changed in November. And myself personally, didn't nail the pivot. Like, I'm not gonna pretend I did. But really, with kind of inflation hitting, accelerating past 5%, 6%, 7%. Now we're at 40-year highs, maybe 50-year highs, depending on this Russia-Ukraine situation and the commodity shortages around the world. The Fed has gone from essentially, having that kind of implicit Fed put and protecting markets to, being somewhat of a political liability from the inflation front. Powell said, and I think it was late October, maybe early November, he said, I was wrong. We were wrong about inflation being transitory. We got to fix this. And although they just raised rates 25 basis points, what really I think is most telling thing is that credit markets are doing all the work for them. So if you look at short end of the curve treasury yields, right now, the 10 years at 2.23%. And so if you just even like the 1-year treasury at 1.3, they were near rock bottom 0%. I'm not sure like exactly the low, but the short end of the curve has really risen significantly. And so for anyone not too well versed in credit land, bond yields trade inverse to the price of bonds. So obviously, as a fixed income investor, if inflation's at 40-year highs, if your CPI is at 8% and you're holding a treasury, that's giving you a 2% yield. Well, in real terms, you're getting killed, minus 6%. So what do? You sell that off. And so thus, because of this inflationary regime that the Fed said they were caught off guard by, fixed income in general has gotten killed, not just treasuries, but also kind of corporate securities, junk bonds, investment grade across the board. You have also mortgage rates rising. So not only are we seeing broad-based commodity inflation, CPI inflation, particularly energy, right? If you look what happened in the '08 crisis and with energy prices going parabolic, that was another kind of big factor in the deterioration of economic conditions, right? It impacted consumer balance sheets, corporate balance sheets, and margins across the board, as well as it basically puts inflationary pressure, which further deteriorates liquidity because credit sells off. So where are we today? Kind of in a pretty ugly position where we are more indebted as a total economy as we've ever been. Federal debt to GDP is over 100%. Corporate debt to GDP is at all-time highs following this decade-long negative real yield binge, and specifically after COVID, with the massive amount of fiscal and monetary stimulus in tandem. The economy is as more over indebted than it's ever been, and we're facing a situation where the Fed's kind of regime has changed. They're now saying we're going to tighten, but again, the treasury market's doing that for them. So yields are rising across the board, which leads to higher financing costs in a historically over indebted economy. Not to beat a dead horse, but I don't think many market participants have grasped this. So while increasingly the developments of Bitcoin have been really, really bullish, right? I've said multiple times, BTC as a numerator, I've never been more bullish. But how the credit system works and the economy more broadly, when you see a recession, when you see a period of credit contraction and kind of a liquidation of malinvestment, what's happening is that dollar is bidding, USD is strengthening. Also against other foreign currencies. So which means that foreign debtors have to sell their dollar denominated assets to raise cash. So that's kind of why I've been increasingly, I guess if you want to call it bearish. I mean, I'm not long-term bearish by any means on Bitcoin, but more so just kind of with elevated volatility and everything in the legacy markets. It doesn't look like an ugly picture. And I don't think we're in the up only by the dip regime that everyone came to know of post-COVID.
How do you see this all kind of like playing out in the end? I think there's a slew of outcomes we could see, but I know privately we've talked and kind of how your position for this is, you're obviously like holding your long-term BTC, but you're perhaps allocated to more cash than you traditionally would be. So how do you kind of see this playing out? What kind of scenarios, because obviously, everything is nuanced. So what kind of scenarios do you think would have to play out for you to look to start, deploying some of that cash? Albeit, some complete meltdown in the credit markets, and you just basically see this massive like dollar short squeeze that you described. Or, what else would you, Fed just came out and said, hey, we're going to go ahead and implement, yield curve control. What kind of scenarios would you have to see for you personally to kind of change how you're seeing the market now?
Yeah. So, I mean, still definitely net long Bitcoin. Just, I don't think it makes sense from a tax perspective to sell, just because of, personal cost basis, yada, yada. I do have some cash. The good news is, if you want to look at February, March of 2020, derivatives have basically completely de-risked, and for periods of time are actually bearish. Whether you're looking at funding rates, or I think that 3-month basis is at like a 2% annualized rate. So there's almost no kind of long speculative bias in crypto markets, Bitcoin, which is good. When I would flip was, I really think this all ends, and I could be wrong, right? Like, it is all probabilistic and nothing is certain, but I think ultimately we're seeing kind of a gradual deleveraging in legacy markets with deteriorating liquidity conditions, and kind of all of this levered beta unwinding. And I think it ultimately ends in a large capitulation in legacy markets. So kind of what we've seen is institutions have basically significantly de-risked a lot of the kind of ARK investment sort of stuff, NASDAQ, that higher beta stuff. You can see institutions are dumping as retail is continuing to buy the dip, and on a net basis, and the stocks and the performers are still getting killed. And so, there will be really strong short squeezes and kind of reversal rallies, but the NASDAQ going down 3% and up 3%, on a daily basis is not a sign of a bull market. And ultimately, I think, I, along with cash, I have some equity market and credit market volatility plays. So long putts on high yield debt, investment grade debt, et cetera, as more of as a long volatility type strategy. Because ultimately, I don't think Bitcoin itself is insulated from that because of that USD denomination, right? And so even if a bunch of people are buying the dip, right, the kind of developments with the Russian Ukraine thing, with Bretton Woods 2.0 kind of being a lot of people are saying signposts, this dollar regime, petrodollar system is on its last legs, and we've seen a ton of developments there. That's all super bullish for Bitcoin. So there could be a period of significant outperformance. I mean, it wouldn't shock me. I've seen stranger things, and if Bitcoin made new all-time highs in the next few months, I'm not writing that off, which is why I'm not net short Bitcoin. But ultimately, I think this regime, this kind of inflationary regime, ends with a complete meltdown in credit markets, an explosion of volatility, and the Fed basically implementing yield curve control. Or maybe they don't call it that. Maybe it's a treasury purchase, agreement or whatever, anything to kind of ease these markets and continue their balance sheet expansion. I believe that's ultimately what's going to happen. They can't materially tighten, right? Even a 25, 50 basis point hike next meeting, Fed funds at 1% or 2%, the bond market's doing it all for them. It's already selling off. It's more just signaling than anything. And so I think at some point something breaks, probably in 2022, I'm sorry, maybe later. But I think just an explosion of volatility across asset classes. We're seeing elevated foreign exchange volatility, commodity volatility, equity volatility, credit market volatility. And really that's during a time when Bitcoin's just chopping around. So, do we sweep the 30K lows? It's anyone's guess. But we've seen a relatively strong bid in that 30K range. I just think that we really haven't seen the devastating sort of move that I think is more likely than not, or at least than the market's pricing it in equities and credit.
Yeah, no, that makes a lot of sense. And I think what you're talking about, you see a lot of people on Twitter saying, well, who would sell BTC sub 30K? And I think what a lot of people miss is that you're not selling stuff that you want to sell. You're selling stuff that you have to sell. With that in mind, I do think it's kind of remarkable how well BTC has held up over the last month or so, given a lot of kind of the headwinds that it's faced. I mean, pretty much every, aside from another nation state ban or something like that, like we saw with China, we've seen pretty much every headwind that you could think of, and BTC is still chilling right around 40K. So I do think that's it's honestly quite impressive. And if you were to kind of give me the current backdrop for Bitcoin, whatever, 3-4 months ago, and say we're still going to be trading 40K, I would say no way, we'll be like sub 30. But again, like we'll see if what you're talking about does play out. I think what people need to keep in mind is that in an event like that, you're not selling stuff that you want to sell. It's just you're selling things that are the most liquid. Bitcoin's a 24/7 liquid market, and so that's going to be one of the first things to sell off. Conversely, it'll probably be one of the things that bottoms out first, as we saw, in March 2020. And as we kind of talked about offline, I think if something like, not that this will happen, but if a scenario like that does play out, I think that's kind of the no-brainer area to get extremely long in preparation for something similar, not the exact same thing as March 2020, but, a similar kind of setup to that. Dylan, what do you think about kind of this? I've had this, I don't want to say thesis because I haven't put like a whole bunch of thought into it, but just general idea of the process of kind of like de-globalization. I think with, the pandemic, first of all, and then lately with, the kind of pressures on energy prices with the kind of Russia-Ukraine conflict, it seems like we're now going to start to see this pivot back to, bringing infrastructure back to within each country's borders, especially in the United States. At least that seems like the logical thing to do in regards to energy. So do you think we'll start to see that kind of trend play out and this kind of, sovereign individual thesis, for anyone who's read the book? I know you have. So do you think we're starting to see kind of the early signs of that trend shift, broader trend shift kind of playing out? And if so, or if not, what does that mean for Bitcoin?
Yeah, I do definitely think we kind of, maybe in February, and I'll preface this with saying I'm not a geopolitical expert. My quote unquote expertise is listening to other really smart people and what they have to say and sort of just filtering through that information. So what other smart people are saying is that the peak globalization is basically, I think, a line in the sand that we saw last month. If you want to think of it as post COVID, where we saw supply chains getting shattered and the talks of we need to bring reshore supply chains as a matter of national security. Well, you can say 2020 was that, but in terms of Russia, Ukraine, and now increasingly around the world, nations becoming very protectionist with their trade policy and their exports, whether that's agricultural, whether that's energy. I think there's a decent chance, just on what some really smart geopolitical thinkers are saying, that the U.S. Somewhat kind of bans or halts oil exports to tamper that that kind of spike in energy costs. There's probably a non-zero chance of that, as well as just reading what some of the stuff that people are saying about Russia and their energy and the pipelines is that if they're basically every nation is saying we don't want your energy, and all their pipelines currently to China that don't go to ports are full. So what this means is that they're basically at full capacity now. And the way that oil works, it's not like Bitcoin miners where you can just like flip it on or off. Like they have to keep pumping. And so if all their reserves are full, they have nowhere to put it, and they don't have the necessary infrastructure to store it, then those rigs have to shut off. Those oil drilling sites have to shut off. And for that's about 10 million barrels of oil a day. And so also never mind the fact that they supply about 40% of Europe's natural gas, and just look at those prices, right? So if we have reached a sort of like peak globalization, which I think we may have, then in general the kind of disinflationary forces that we saw since the 90s, but really in particular since the early 2000s, where we saw CPI at 2%, 3% at the high, really, like 2%, while asset inflation and M2 expansion was 10% year over year, right? As long as there's no consumer inflation, things were fine. And so if we are, never mind the fact that there's probably somewhat of a short-term spike, and that rate of change comes down from say maybe 10%, maybe 12% to around normalizing around 5 or 6% over the next 3 years, right? Maybe I'm being too conservative. Maybe I'm being not kind of maybe I'm lowballing it, but just say 5%, right? Then credit markets in general have a long way to go to sell off. And that means much higher discount rates. And that means that the system completely melts down. with that higher inflation. And so ultimately, I think that what sustained higher inflation rates on the consumer side means is that ultimately the Fed probably monetizes like almost all of the credit markets. Because if you're just thinking about it, corporate financing rates, junk bonds, and if like I think 50% of equities are junk issuers at this point, or like triple Bs. I'm not sure. I don't have the exact data, but I know it's at all-time highs. And so those rates for financing is like 6%, and that's after junk bonds have already gotten killed. So 6%, but CPI is at 8%. And unlike treasuries, issuers can nominally default on their debt. Corporates can go insolvent. They can go bankrupt. And so as a creditor, it makes zero sense to take a negative real yield on a junk bond when there's not even default risk priced in. Whatever that probability of default is, 1%, 2%, 3%, you have to take that into account. So in general, if we have reached this point of peak globalization and inflation is not going to go back to 2% over the next 5 years on average, well, something is going to break. And that means that, if the Fed's kind of two-pronged mandate is inflation and price stability and employment, well, let me tell you, if corporate rates go to 8% or treasuries go to 5%, the employment is going to be the problem, because there's going to be mass insolvency. And so the worst job in the world, I think, is Jerome Powell. I don't know why he took a second term, but in general, that peak globalization, if we have reached that point, and my guess is as good as anyone's. I just, like I said, listen to smart people. Then, there's going to be material change in the coming decade, and I think with that, there's also a lot of financial opportunity.
Yeah, absolutely. Hey, Dylan, I think that's a good place to wrap it up. I know this was a bit shorter one. I told you we'll keep it, kind of short and sweet, and I think we hit on a lot of good stuff. So I'll let you enjoy your time in Austin, man. And before we wrap up, just want to give you a quick plug to hand people off to your Twitter, which I'm sure mostly everyone's following. But the deep dive TBD onto what that's going to be turned into. But hand off to everything, or any last comments you want to give before we wrap up.
Yeah, I mean, I appreciate you having me on, man. It was good to connect and kind of bounce ideas off you. You can just find me on Twitter if you're interested in some of the research that I do with BM. You can just check the link in my bio. If not, we do focus on some of the on-chain stuff, which we should mention is pretty bullish. But while we're in kind of this weird environment, I think that marginal macro seller is what's driving everything. But we do incorporate kind of that three-prong analysis of macro, Bitcoin supply side, and derivatives. So yeah, you can find me there and find me on the Bird app, and I'm sure we'll be memeing back and forth at each other.
Cool. All right, thanks so much, man. I can't wait to see you in April. We'll have a blast.
Yes, sir, bro. Peace.
Take it easy.